The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
I think in terms of demand, these products tend to attract longer term investors. So they tend to be a little bit more less price sensitive. Obviously, when we'll have a bear market, I expect to see some outflows. But I would say overall, I think the trend is pretty clear and the demand is rising, and I think we'll keep rising in the next few years.
Hello, you're watching Proactive. I'm joined by Finekia International Senior Associate Matteo Greco. Matteo, very good to speak with you. Digital asset ETPs hit a record $218 billion in assets under management last month. What's driving the sustained institutional appetite for crypto exposure?
Hi, Stephen. First of all, happy to be here as usual. Um, Going to your question, yeah, so new all-time high for crypto ETPs, third month in a row with total AUM above 200 billion, and this growth is just a steady and continuous growth that started in January 2024, post the Bitcoin ETF spot approval in the US. So it is two factors that are playing pretty well together. On one side, of course, the crypto market itself has been pretty strong in the past couple of years, and that of course drove additional demand both on the crypto retail side and on the institutional side. And then obviously the approval in the US paved the way for a much broader exposure to TradFi investors, and demand on that side strongly rose since the start of 2024. And these two factors combined together are just driving a strong growth of the AUM during last year and this year as well.
Bitcoin ETPs saw renewed inflows in September after a brief dip. What does that tell you about investor sentiment towards Bitcoin at current price levels?
It definitely shows strong and organic demand, because in we saw last month some small outflows from the Bitcoin ETP ETFs products, which was the first instance on a monthly basis since March this year. But the fact that the month after we immediately saw some renewed inflows just showed that it was just a brief moment of pause, which is I would say standard after a few months of strong accumulation. And this month, last month in September, we witnessed already again a premium. So Bitcoin price, of course, rose more than 5%, but the Bitcoin AUM rose more than 6% and showed about 16% premium. So we witnessed net inflows already again, which shows a strong and organic demand, which is again, as I mentioned before, going on since the beginning of 2024. So the institutional demand is definitely there.
Ethereum ETPs held steady even as the Ethereum price pulled back. Matteo, why do you think institutional investors are continuing to add exposure to Ethereum?
Um, I think what's happening is sort of playing what happened in the crypto space years ago. So now the financial products, regulated financial products holding Bitcoin have been around, in Europe and also partially in Canada for quite a long time, and then of course in the US in the past like 18 months, and there's now this strong credibility that obviously gave investors the confidence to also expand their exposure to the asset class beyond Bitcoin. So what happened with Ethereum is that after a bit of a slow introduction, because in the after the spot approval in the US last year, the first couple of quarters were not great in terms of inflows. We've seen a strong demand over Q2 and Q3 this year. And this is just showing, in my opinion, a broader confidence of investors for the asset class. And, a lot of investors got exposure to Bitcoin last year, and this year they just expanded their exposure and decided to also deploy some capital over Ethereum structured products.
Altcoin ETPs surged nearly 37% in September. What's behind this acceleration and which assets are leading that growth?
This is mainly a factor of the Ethereum trend because it's a really typical pattern in the crypto space that Ethereum is sort of leading the way and the setting the line in the sand in terms of altcoins. So what happened is that as mentioned in the past 6 months roughly, there's been a strong demand for Ethereum, and that played in favor of some additional demand for other altcoins as well. In terms of structured products, there's definitely a dominance in the altcoin aside from Ethereum on Solana. In terms of both number of products, issuers that launch the product with Solana's underline and AUM. In terms of asset performance itself, we've seen, I would say, mainly Binance Coin, BNB, the asset behind Binance, to be the strongest driver. But those are mainly the two assets, I would say.
Looking ahead, Matteo, do you expect the momentum in digital asset ETPs to continue through the fourth quarter, or are there risks investors should be watching out for?
It's always tough to say, obviously, because markets are really dynamic and volatile. But at the moment, the historical data points are showing us that in the past couple of years, there's been basically never a pause in terms of demand. Obviously, some months have higher demand, some months have a bit lower demand, but overall, the trend has always been positive. It is true that we have to see what happens in the moment of maybe a strong downtrend for the crypto assets, see how the flows react. But it's also true that at the beginning of the year, we've seen a strong dip in the market, Bitcoin dropping about 30%, and the outflows from the financial products were not as strong. So I think in terms of demand, these products tend to attract longer term investors. So they tend to be a little bit more less price sensitive. Obviously, when we'll have a bear market, I expect to see some outflows, but I would say overall, I think the trend is pretty clear and the demand is rising, and I think we'll keep rising in the next few years.
Matteo, thanks as always for your insights. Very good speaking with you today.
Likewise. Thank you, Stephen.
Matteo Greco is Senior Associate at Finekia International.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.